Elon Musk is one of the most innovative, visionary, and impactful businessmen of our time. He has changed the game in a number of industries, from electric vehicles and space travel to tunneling and artificial intelligence. He is not just a businessman, but a true futurist who is working tirelessly to make the world a better place. If you bank on a test of retirement and save up an amount of shares whose market value equals $1 million, you may have sufficient funds to retire. The pina coladas in Honolulu are on the line. Stay tuned to learn how many shares you may need to join us. In a few years, Tesla will open a bowl in Honolulu. But before we go, hit the like button and get in touch. When the video was shot, $3,200 a month was thought to be a good salary, equivalent to $38,000 a year. However, because of inflation, the current monthly salary is estimated to be around $4,600. Investing in the S&P 500 can earn you roughly 7% annually. In order to combat the effects of inflation, it is advised to invest in inflation-resistant assets, like gold, real estate, or stocks if you do not save for investments. With the current inflation rate of 6.5%, cryptocurrencies or cash may not provide adequate protection against inflation. We expect inflation to average between 3.5% and 4% over the next 10 years. From $38,000 to $55,000, the total annual income has increased. By 2030, we project that the entire income will need to reach roughly $72,000. By 2030, you might want to think about alternate investment possibilities if you are worried about the stock market's volatility, particularly with regard to a specific stock like Tesla. For example, the S&P 500 has historically returned roughly 10% annually and is a fairly stable option, with an average annual return of 8 to 10%. If you want to retire on your Tesla stock and S&P 500 investments alone by the time you reach 2030, you will need to have saved approximately $1 million. Purchasing Tesla stock might make you a millionaire. You could live comfortably on a $1 million investment at 7% of the S&P 500 for 40 years. As a worst-case scenario, I had originally projected 20 million vehicles annually, but I've since altered my mind because several delivery scenarios are readily available, comprising a scenario with 15 million vehicles, a base case with 10 million vehicles, a bulk case with 20 million vehicles, and a 33 million vehicle extremely bullish instance. Fully autonomous vehicles are expected to cost close to $30,000 each. So while this may seem expensive, it's vital to take that into account. It is anticipated that the $15,000 one-time payout would quadruple by 2030, a mere 7 years away. The cost of a Tesla FSD is a one-time charge equal to roughly 15% of the vehicle's current value. If Tesla had an updated figure, they would likely be using it by now. By 2030, even with the sale of 25 million vehicles and the adoption of FSD, Tesla is expected to only generate $1 trillion in revenue annually. The company has pledged to have 1 million robot taxis on the road by the end of the year, and there are already over 3 million vehicles on the road, a significant increase from the previous years. The projected net income ranges from $110 billion in the bear case to much higher amounts in the bull case, which may come as a surprise. Remember that the quantity of shares may change, and the Firm 1 stock price prediction study found that, in addition to dividends and earnings per share, buybacks may be chosen in the future. The study's findings are fascinating. In the event that production has the worst possible outcome, let's talk about the stock market. The market capitalization might be close to $4 trillion, and the stock price per share could reach $10.68. This suggests that even although it is estimated that 20 million vehicles will be produced by 2030, it may be delayed by a few years. We estimate that the company may produce between 16 and 18 million vehicles by 2030. But for the purposes of this scenario, we will assume 20 million under an even more optimistic scenario, which may not be achievable by 2030. If 10 million vehicles are manufactured by 2030, the value would increase by at least 4 times under the bear projection. If we were to sell 50 million vehicles, the stock price would be valued at $1,600 per share. In the bull scenario of producing 20 million vehicles, the stock price would rise to $2,136 with a market cap of over $7.8 trillion. In the most optimistic case, the market value may exceed $9 trillion, and the stock price would be almost $24.56. In the additional bull scenario, the company is trading at $2,670 per share with a market value about $10 trillion and a P/E ratio of 35. However, Given that this looks like a very implausible idea, estimations between 15 and 23 are preferred. You must calculate the minimum number of shares you need today in order to reach $1 million in retirement funds by 2030. In the Super Bears case scenario, you will need 936 shares at a cost of $190 per share, or a total of $177,000. If 15 million cars are delivered, 624 shares will be needed, which would cost around $180,000 today. This is less than the $17,700 that will be needed in the extreme bear scenario, which calls for 936 shares at a cost of $10,868 each. Let's move on to the optimistic cases. And just to clarify, these are just some numbers, so always make sure you do your own research and confirm the accuracy for yourself. In this bullish scenario, 407 shares are currently required, which would cost roughly $77,000. This goal can be achieved by maintaining discipline with spending and practicing self-control over money management. It may seem unrealistic given the current market outlook and optimistic projections, but anyone can achieve it. As I mentioned in the video, reaching 20 million vehicles by 2030 might take longer than expected due to unforeseen shutdowns or lockdowns in nations like China. Therefore, it might not happen for a year or two. However, even the most optimistic projections have errors, and this one is no exception. To summarize, even in the best-case scenario, a total investment of $77,000 is required, which as of this writing equates to about 407 shares. This sum is not insignificant, but it is achievable with commitment, careful preparation, and patience. Many Tesla bulls have made significant investments in the stock because they see the potential for Tesla stock to increase exponentially in the near to medium future. If you bought Apple stock in 1998 and did nothing until 2008, you would have still profited by waiting it out. Despite the present market collapse, now is a fantastic time to invest in Tesla. Let's evaluate the potential that the stock market would decline owing to poor macroeconomic conditions and high interest rates. All things considered, don't allow your worries stop you from acting. In a few years, you'll look back and consider the stock price of $190 per share to have been a terrific investment. Despite the current difficulties experienced by Russian firms owing to a faltering economy, I believe that Tesla is a low-risk investment alternative. Of course, I'm not a professional financial advisor or investment advisor. I'm just doing research to form my own thoughts. Tesla is still new to the market and is having trouble keeping up with rising fuel prices. The stock price for vehicles and fully autonomous driving was estimated to be around $2,600 per share in the extreme bull scenario. But without the addition of Tesla Insurance Energy and Tesla Bot, the scenario is obviously incomplete. And it's possible that Tesla's market cap and price per share could increase to even greater heights by 2030. Nevertheless, some investors may not be aware of these factors in the end. It's important to verify information before making any decisions. Please watch our other videos on this channel to see our future projections. If you enjoy this video, please hit the like and subscribe buttons. I'll see you in the next one.